In this video, we're going to be discussing closing costs and prepaid expenses for buying a home. And we're going to be focusing on Massachusetts. I mean, most of this is very similar in other states across the country, but there are a few slight differences for Mass itself, which we'll kind of briefly discuss. For those of you that do not know me, my name is Jake Boucher. I'm a realtor with Lamacchia Realty in Leominster, Massachusetts. And without further ado, we're going to jump right into closing costs and prepaid expenses. So again, closing costs and prepaid expenses. How much do I need to purchase a home? That's a very common question amongst home buyers, especially first-time home buyers. Probably after I go through the whole definition of what each closing cost and prepaid expense actually means, we'll get into a sample scenario, and I will link this article in the description so you can take a peek at it for yourself afterwards, even though I'm going to be putting screenshots up on the screen throughout. There's such thing as closing costs, which a lot of people have heard of, but they don't know exactly what they entail. So we're going to focus on closing costs first and then get into the prepaid expenses side of things. So there is lender and attorney fees. There's especially an attorney fee for Massachusetts. A lot of states do have title companies throughout the real estate transaction, but Mass typically has a buyer's and seller's attorney in every single transaction, negotiating on the behalf of their client throughout. Not just looking at title. Yes, they do title, but they're also there for legal counsel because we have something that's called a purchase and sale. So they handle the purchase and sale agreement, which some states, the attorneys don't do that. And the realtors actually draft those purchase and sale agreements themselves. So first up, as you're going to start seeing on the screen, is the lender fee. These are the fees that the lender charges you for doing the work that they do in terms of just processing and approving and getting your loan ready to go. Then there's the appraisal cost. So for those of you unfamiliar with what an appraisal is, your lender, if you're financing the mortgage, is going to hire an appraiser to go to the property, and they're going to check the condition of the property and compare it to other similar properties in the area that's sold to determine market value for that property in particular. For example, I like using this as an example. If you made an offer and your offer got accepted at $400,000 purchase price, the appraiser does what they need to do. They release the report. You see that the market value or appraised value comes in at $390,000. That means you're about $10,000 off from where you should be. And at that point in time, you can renegotiate the seller side. You can meet in the middle. There's various strategies you can use to eventually make that work. But if the appraised value comes in at $410,000, then that's excellent. That means you have $10,000 in instant equity in the home if you bought it at that $400,000 price range or price point. And then a home inspection. These are not required. They're not pass or fail. It's just simply helping you, the buyer, understand what's up with the house. They're going to determine everything that they see with the house, whether it's good, bad, ugly, so on and so forth. They'll make some potential recommendations, but at the end of the day, their home inspector's job is not to, oh, you need to fix this, you need to fix this, you need to fix this. This is how much this is going to cost exactly. You know, they're not going to go through that. Yeah, they'll give recommendations, but that's about the extent of that. They're going to evaluate the property for potential problems such as building codes, items that might need repairs, and typically you're going to pay the home inspector right after the inspection is done. For example, I was actually at a home inspection this morning, and the buyer paid the inspector as soon as he finished. They wrote him a check right on the spot. Attorney fee. So I already mentioned real estate attorneys, especially Massachusetts. Buying a home, it's literally one of the biggest purchases, or is the biggest purchase that someone will make in their entire lifetime. Some people buy one home and that's the only home they ever know. If you spend an extra $700 to $1,500 in that ballpark, could be a little more, could be a little less, I don't know. It really depends on the attorney you're looking to hire. It's like great money spent, especially, no, a real estate attorney, I should mention that, not like a litigation attorney, criminal attorney, a civil law attorney, nothing like that. A real estate attorney, that's what you need. They will go above and beyond to make sure that the home has no title problems, no liens against it, and they're going to make sure that you're protected before you officially close on the property. And in Massachusetts in particular, the attorney typically handles all the money in terms of they collect the down payment, the closing cost credit. You write a bank check for them at closing, you wire them the money on closing day, so on and so forth. And I already mentioned the purchase and sale agreement. So once your offer is accepted, the next steps in the process begin. You're going to need, so if you do a home inspection, that'll be next up in the process. In most cases, sometimes you might do the purchase and sale before the home inspection. Depends on the negotiation process and if the seller, if you're doing an inspection for informational purposes only. They might say, hey, we're going to get the P&S signed before you do the home inspection. It really depends on the listing agent and their expertise. Typically, the purchase and sale agreement is after the home inspection. Once the purchase and sale is officially signed by both parties, the seller and the buyer, the deposit is then paid. That contract then is the contract you follow moving forward until the day of closing. So that supersedes the original offer to purchase real estate, and the purchase and sale agreement is therefore the offer for the rest of the transaction and the contract that you follow. Okay, title insurance, you're going to need insurance throughout the whole process. If you obtain a mortgage, you're going to be required to purchase title insurance for the bank. This is going to protect you in case something comes up which was not addressed for some reason during the transaction. Sometimes things are missed, sometimes things can't be found during the title examination process. Problems with records, registry of deeds, things like that. Paperwork gets lost, so you can never be too cautious. The recording fee, so the registry of deeds will charge a recording fee. This is just the cost you have to pay for your new deed, your mortgage, all associated paperwork, officially entered into the permanent records of whatever city or town or county you're officially buying in, so that you're officially the legal owner of that property. All right, and then that's it for the closing cost. Now we're going to talk about the prepaid cost that you need to be aware of when buying a home. So there's prepaid interest. So when a buyer buys a home, the mortgage company is going to require them to pay the interest on the day of closing until the end of the current month. So if you close on February 15th, you would have to pay the interest on the loan until February 28th, and then the first mortgage payment will be the next full month after, which is April 1st. Prepaid real estate taxes. These taxes are paid in a similar fashion to the prepaid interest, except they're paid quarterly. So again, the February 15th example, they would typically have to be paid until March 31st, which is the end of the first quarter for that particular year. And then homeowners insurance. This covers major losses and other specific damage cases as outlined in the policy with which you choose. Lenders will require this to protect their investment in the form of the loan you made to them for the mortgage. But it's really in your best interest to have it for completely obvious reasons as well. The insurance company will require upfront payment for the first year and is typically paid prior to closing directly to the insurance company. So that's like Geico, it's like Progressive, or whatever insurance company you currently use. Ask about their insurance or homeowner insurance plans. Now we're going to talk about the example with numbers and stuff. So this is just estimations for a lot of these numbers. Don't take these numbers with a grain of salt. Like, they're not ironclad. They're subject to change. It really depends on the transaction. Depends what county you're buying in, what town you're buying in, what state you're buying in, what lender you're using, what attorney you're using. All this is just for estimation purposes and just gives you a better idea of what it looks like when it's all said and done. This is just a sample scenario as you see in the article, as you see on the screenshot. So a purchase price of $400,000, you're doing 20% down. So you're doing $80,000 down payment at the time of closing. The lender fee, which we already talked about, let's say $1,000, and the appraisal, they're going to hire their appraiser to go to the property. That could be $400, that could be $450, that could be $500. Depends. Home inspection, let's say $400 to $600. The attorney, we already mentioned the $700 to $1,500. Split that in the middle, $1,000, $1,100 potentially. Title insurance, $975 maybe. Title insurance for the lender, $800. A recording fee to get that in the registry of deeds, $365. Remember, this is not a real life scenario. I mean, it could be, but it's just giving you an idea of what it all looks like when it's all said and done. And then the prepaid, so prepaid interest, it could be $700. Tax for the 4 months, $1,400. Insurance for the year, $1,000. So total prepaids, $3,100. So total closing costs and prepaids, so $8,089. And the total money you would need at closing, including the 20% down payment, which was $80,000 on that $400,000 home you're buying, would be $88,089. That is an example of closing costs and prepaid expenses. I hope that was helpful. I know there's a lot of numbers, and again, I'm going to link this article in the description that you can read for yourself, and you can go back to it if you need to. You can go back out throughout this video if there's something that you may have missed. It's a lot. I guarantee you, if you know this stuff up front, you're going to know a lot more than the average person, because I have so many buyers that question what closing costs really are. And here it is, just laid out in front of you. Different states will have different things. Different counties will have different numbers. Different lenders will have different numbers. Different attorneys will have different numbers. All of this is just a hypothetical situation right here. So take all of this with a grain of salt, but this gives you a great overview of how it looks, and it gives you a better idea of what each thing entails, what each closing cost entails, like the lender fee, the appraisal, the home inspection, the attorney, so on and so forth. Gives you a better idea of what the prepaids are. If you have any questions, leave a comment down below. You can reach out to me directly, email, my cell phone number, which is in the description down below. You also got my social medias, and you can click on those links and connect with me that way as well. So I hope this was helpful to you, especially if you're a first-time buyer, or maybe you're buying a home for the third time. You're still a little cloudy on how all this works. And there's also more mortgages. Maybe I'll do a different video where we can talk about mortgage options. I'm not a loan officer or a lender, so I don't want to dive too much into it because that's not my lane. But there's like conventional Fannie Mae and Freddie Mac loans, jumbo loans, VA loans, FHA loans, mass housing loans, New Hampshire housing loans, USDA loans, 203K and streamlined 203K loans, adjustable rate mortgages. Maybe in future videos I can kind of briefly give an overview of all of these, even though I'm not a lender, like I said.